Okay, let's jump right in. We're going to talk about one of the most powerful tools out there for tackling climate change, using finance. I'm talking about green bonds. It's this fantastic idea where your money can work for you, sure, but also for the entire planet.
So let me ask you something. When you put your money into an investment, what's the goal? I mean, yeah, a financial return, obviously, but what if it could be more than that? What if your investment could, literally build a new wind farm or help fund a brand new high-speed rail line? Well, with green bonds, that's exactly what can happen.
So how can investing actually, become a real force for good? And look, this isn't about some fuzzy feel-good marketing slogan. Nope. We're talking about a very real, very specific financial instrument that's completely changing the game for how we pay for a greener future. Okay, so what is a green bond, really? Well, think of it this way. At its heart, it's just like any other bond. It's basically a loan you're giving to a company or a government. But, and this is the big but, here's the key difference. Every single dollar raised from that loan has to go towards projects with clear, measurable environmental benefits. We're talking renewable energy, clean transportation, that kind of stuff. And that is the fundamental difference right there. With a regular bond, a company can take the money and use it for, well, anything. Marketing, building a new office, you name it. But with a green bond, that cash is locked in a special box, you could say. It's ring-fenced. It can only be spent on those approved green projects. So the whole focus just shifts. It's not just about financial return anymore. It becomes this awesome dual return. You get the financial piece, and you get the environmental impact.
Now, I know what you might be thinking. This all sounds fantastic. But how do we really know the money is doing what it's supposed to, right? How do we stop a company from just greenwashing, slapping a green sticker on their normal operations and calling it a day? Well, there are some pretty solid safeguards in place.
The key here is having strong global standards that everyone agrees on. And the big one, the one that pretty much everyone uses, is called the Green Bond Principles, or GBP for short. Now, these aren't just, friendly suggestions. They are a tough set of rules that any serious company or government has to follow if they want our trust and our investment. So how does it actually work? It's pretty straightforward, really. It breaks down into three main steps. First, before they even get a penny, the issuer has to spell out exactly what counts as a green project. No vague stuff allowed. Second, the money gets put into a separate pot, basically, and it's tracked super closely to make sure it doesn't wander off. And third, and this is huge, they have to report back on the results. They have to show investors, here's where your money went, and here's the positive environmental impact it had. And that right there, that signals a massive shift in how people are thinking about investing. For folks putting money into green bonds, the annual report isn't just about profit margins. They're looking for real, hard data. They want to know how many tons of CO2 emissions did we prevent this year. The impact is becoming just as important as the interest payment. Okay, so what's in it for you, the investor? This is where we get back to that powerful dual return idea. Because green bonds aren't just about feeling good, they can be a really smart move for your portfolio too. There are three big reasons why. First up, risk. Think about it. Governments everywhere are cracking down with things like carbon taxes or these new border tariffs on carbon-heavy products. Suddenly, companies with a big carbon footprint look a lot riskier, right? Green bonds help protect your money from that. Second, growth. You're basically tapping directly into the industries that are set to explode. Things like electric vehicles, hydrogen power, smart energy grids. And third, responsibility. You're putting your money where your mouth is, which is something that big investors, like pension funds, are now pretty much demanding. So what's the big picture here? Where is this all going? Well, green bonds aren't just some small, niche thing for eco-investors anymore. Not at all. They're going mainstream, fast. They're becoming a central part of how we're going to fund the entire economy of tomorrow. And the reason is simple. That huge global goal of hitting net zero emissions by 2050. I mean, to get there, we need to move an unbelievable amount of money. We're talking trillions of dollars away from the old stuff and into green technology and infrastructure. Green finance isn't just a nice to have for this transition. It's the engine that's going to make it happen. It is absolutely critical. And it doesn't even stop there. The whole space keeps evolving. The next big thing is something called a sustainability-linked bond, or SLB. And this is really cool. Instead of funding a specific project, The interest rate on the bond is tied to the company's own climate targets. Get this, if the company hits its carbon reduction goals, they get to pay a lower interest rate. But if they miss them, the interest rate goes up. It's this brilliant, direct financial kick to get the entire organization to go green and go green fast.
So that kind of brings us full circle. It's pretty clear that green finance isn't some sideshow anymore. It's moving to the main stage of our entire economic future. It's a way to make your portfolio safer, to get in on major growth areas, and to make a real difference. So the question I really want to leave you with is this. As this massive global shift to a low-carbon world picks up speed, are you ready for it?